Okay, everyone, thanks for joining us for our Business Central Year-End Closing Procedures webinar. My name is Drew Colo, and I'm a Senior Marketing Consultant here at Savantis. In just a minute, I'll hand it off to Janelle Riley to get started with the presentation. But before I do, I wanted to just make sure everyone is aware that this meeting will be recorded. So you will receive a recording of the webinar in your email in the next day or so. As well as full year-end close documentation from here at Savantis. So we will pass along the documentation and recording for you to review afterwards. If you have any questions throughout the presentation, feel free to use the questions tab of this meeting, and we'll go ahead and have Natalie Potvin, one of our BC consultants, go ahead and answer them. Janelle will also be doing a Q&A at the end of this webinar. So if you do have any questions directly for Janelle or Natalie, we can go ahead and save them for the end, and you can put them in the questions tab then, and I'll go ahead and read them off to Janelle for her to answer aloud. With that being said, I'll go ahead and introduce Janelle here. Janelle is the CEO of Savantis and a CPA, as well as experienced consultant with Dynamics ERP with 20 years of experience. So with that said, Janelle, go ahead and take it away here, and we'll answer any questions as they come up.
Great. I'm Janelle Riley, like Drew said, and I'm the CEO of Savantis. I'm also a CPA, and I've been working with Dynamics ERP for a very long time. And what I'm going to do today is talk about the year-end closing procedures for Business Central and NAV. I have to preface this by saying that I have a screaming bad cold right now, and it's not coronavirus, but it is a cold. And so if I have a coughing fit, Natalie is going to take over for me so that we don't waste your time. So just so you know, if you hear the words ice cream, that's my code word. I'm not going to make it. We'll give it a shot. Okay, so let's go ahead and get started. What we're going to do is we're going to talk through these things on the agenda. We're going to talk about the year-end update for NAV and Business Central. We're going to kind of talk about when you should perform closing procedures, what your best practices would be for preparing for closing procedures. And then what I'm going to do is I'm going to talk about year-end closing procedures by module, basically receivables, payables, and inventory, NGL primarily. And then after that, I've got a few FAQs, frequently asked questions that people ask every year. But also I encourage you in the chat to go ahead and ask questions as we go through, and so that we can answer them, as we're going through the sessions. So the big thing is the 2021 year-end update release. So here's what happened. In September, the IRS released new 1099 NEC and 1099 and miscellaneous forms. They also did 1099 div, which isn't quite as big of a deal for many of our clients. But the NEC and the miscellaneous forms is a big deal, right? Because so if you're doing your 1099s from NAV or Business Central, you will need to have this release. So I'm going to talk about how they work, okay? First of all, and it's different depending on the scenario. So if you're a Business Central online customer, in other words, you're the SaaS version of Business Central and you're using the one that is deployed by Microsoft and hosted by Microsoft, the update is free, but you do have to click a button to get it. So I just want to make sure I'll hit that when we get there. And you just have to click a button and you'll have it. If you're Business Central or NAV and you're hosted by us, the update is free because we include that in our service, but we do need to schedule it for you because we have to install it on your instance on NAV or BC on Azure. If you're an on-premise customer, the main differentiator is, are you on NAV 2017 and later, or are you on some version prior to NAV 2017? If you're on NAV 2017 and later, and you really have no modifications at all, or no extensions, we can go ahead and install the update for you, most likely. We'll have to go through our technical people to clarify, but assuming you don't really have any significant modifications or extensions, we should be able to install the year-end update release. If you're an on-premise customer and you're not on NAV 2017, you can't get the update because you're not current on your support. In other words, you're not current on a current version, so Microsoft doesn't release anything for prior to NAV 2017. If you're in NAV 2017 and later, but you have all kinds of modifications in the system, or you have special scenarios with integrations and things like that, a lot of times we find it's better not to install the update, but instead for us to go ahead and just update the forms for you only. The reason that our developers prefer that is because they're concerned that if they install the update, Microsoft includes a lot of other things in with those year-end updates. And we want to make sure that we don't break anything. If you've got, extensions, modifications, integrations, things like that running. And so a lot of times we'll choose to just update the form for you manually so that you can go ahead and get the forms and do your 1099s. So it's kind of a lot to think about, but if you know which scenario you are, then you'll know, what you need to ask for. I've got this on the next slide, but you can email support@savannas.com and we will help you through that because we have consultants assigned to your account if you're part of Savannas. If you're not part of Savannas, you can still email support and we'll give you the information. We're not going to charge you for it. We just want people to be able to get the updates as they should. So the form changes, like I mentioned, were 1099 miscellaneous, 1099 NEC, and 1099 div. And a reminder that there's no update for NAV versions prior to 2017. So let's talk next about when you close. The first thing is, when can you start entering your first transactions into 2022? People are confused by this a lot. The answer is actually very simple: as soon as possible after year end. Usually, most of our clients have their year end closed within 5 to 7 business days after the end of the fiscal year, which for calendar year companies is between January 4th and January 8th. By January 10th, we're not hearing much from our clients anymore because they're done. And I encourage you to do this. If you're doing good month-end closes, month-end soft closes, year end is no more difficult than month-end close, and you should be able to get it done that quickly. Now, if you are having issues and it takes you longer to do that because of special circumstances, we might be able to give you some suggestions of what you could do to accelerate that time to close, because it's really nice for management to have those numbers as soon as possible after year end. Can I enter transactions in 2022 before I close 2021? Absolutely, yes. You can go from December 31st to January 1 to January 2nd, and your people can continue on with production. They can do everything they've always done and just go straight on into 2022. For those of you who have recently migrated from Dynamics GP to Business Central, that's a difference. Because with Dynamics GP, because of the batch processing methodologies they used, you actually had to keep everything in batches, and then until year end was closed, and then you could go ahead and do the post. With NAV being NAV and Business Central being pure online systems, you can just keep going. So that's really nice. Big question we always get is, what if I have an audit, and I've got my numbers and everything like that, but my audit's not going to be done for like 2 months. What do I do? Close the GL anyway. Go through the closing procedures and get it done so that you're all wrapped up and ready for the next year. NAV and BC handle post-closing adjustments really well. So you can go ahead and enter post-closing adjustments and other backdate transactions into a prior closed year anytime you want to. The only trick is, after you do it, you need to rerun the close to income statement routine after you do that adjustment. So again, with GP people, that's a little different. It's the same concept, but GP people who have migrated to Business Central, GP just automatically hands all the post-closing adjustments. With Business Central and NAV, you actually have to go back and rerun that close to income statement routine afterwards. So let me tell you how this works then with NAV and Business Central. So let's say that I have some sort of purchasing or payables accrual that I have to do, right? I have some sort of accrual that I need to book. Let's say I'm going to book some sort of accrual for real estate taxes. So I'm going to debit real estate tax expense. I'm going to credit. I'm going to credit my, real estate taxes payable, right? When you post that transaction, the next step is you go in and you rerun closed income statement, which just takes a minute. You run that routine, and what that close to income statement routine will do is debit retained earnings and credit your real estate tax expense account. Magical, it works great. And keep in mind, you don't have to run that close to income statement routine every single time you post an adjusting transaction. Just make sure that you do it so that you get it rolled forward into retained earnings, at some point. So what do I have to do to prepare for close? You need to order your 1099s and W-2s. W-2s in this case would only apply if you have one of the add-on applications, such as for payroll, which is like Integrity Data or one of those solutions. But most of the NAV and Business Central clients have outside payroll systems, and so all you need to do is order your 1099s. The preferred provider of Microsoft Dynamics Forms is actually Deluxe Corporation, deluxe.com. And you know, if you need a little assistance with that or aren't sure which forms to purchase, you can email Kari.Stockson at Savandis.com. Kari is actually our controller, and so she's had to order the forms, and so she actually has the form numbers that she ordered, and she can give you some suggestions for that. You can also email support, and they'll forward it on to Kari. So let's talk about what we've got to do. I'm going to do a reminder for a lot of the people out there. What I've been seeing is, you know, sometimes, rarely, but sometimes we do have clients that aren't performing balance sheet closes every month. And this is something that should be happening every single month end. But I just want to give you a reminder of the theory behind balance sheet close. So let's think about this. We're all accountants, right? We know assets equals liabilities equals prior year retained earnings plus current year income wrapped on there, right? So I know that's the formula, right? So here's the theory behind balance sheet close. If you are going through the balance sheet, you don't actually have to go look at every P&L account, right? You don't have to in order to get the right net income number. So how do you get the right net income number? You go through every single asset account and you validate what is in every single asset account. So cash, you can validate that by doing a bank rec. Loans, you can, you can go ahead if you have loans to customers or anything else, you can validate that by looking at the loan amortization schedule. If you have accounts payable, it's your historical age trial balance. If it's accounts receivable, age trial balance. If it's inventory, it's your inventory count. Basically, if you could think in theory, if you could go through every single asset in your balance sheet, every single liability in your balance sheet, and with outside verification can prove out every one of those numbers, then those two numbers are solid, right? You already know what your prior year retained earnings is, so that number is solid. So the only number out of this whole equation that you don't know is current year income. What that means is if you get your assets right, you get your liabilities right, you get your prior year retained earnings right, your income is right. Now, when you're done, you can actually go back and do some reclasses in the P&L if you don't like it, but you already got the net income number. You just may have some reclasses to do if you've got some miscodings. So we are going to be sending you, everybody who's attending this webinar afterwards, we're going to be sending, our detailed year-end closing instructions. And at the end of those year-end closing instructions, we actually have the list of reports that we recommend to support each one of those accounts. And again, if you have additional information or additional accounts you're not sure about, we can help you with that and give you suggestions. And of course, you can go to your CPA firm and talk to them about it as well. So that's kind of giving you the background. Let's talk now about what the closing procedures would be by module. And I'm including not just GL close, which is what a lot of people think about, but what other things should I be doing besides just GL close? So the first thing I need to do is usually my first thing I do right after December 31st is I'm going to post all my sales, purchasing, and inventory transactions. That's the first thing, right? So that I can nail down those numbers. Then when I go into inventory, one of the best practices would be to go in and look at all of your items that you're no longer, I'm sorry, you know what? I worded that wrong, that you're no longer purchasing. Okay, so we'll have to update the slide before we send it. Discontinue all items that you're no longer purchasing. And you do that by going to the item card replenishment purchasing blocked. What does that do? That makes sure that this is a discontinued item. I'm never going to buy it again. However, I might still have something in stock. I can still sell it. The next thing I'm going to do is I'm going to go in and block all the completely inactive items. I have no quantities in stock. I'm never going to purchase it again. I'm never going to sell it again. If I do that, and I do that at year end, it's a really good procedure to follow to spend the time to do this. Because then, you're at least once a year, my inventory is super clean. Then what I'm going to do is perform a physical count, post any adjustments, and there is a cycle count functionality built into NAV and Business Central. And if you need some assistance with that, we can certainly help you with that. Then what you'll do is you'll print your inventory valuation report. The inventory, and if you search in NAV or Business Central for print inventory valuation report, you'll find it. And that report lists out all of the quantities and the valuation of each based upon your costing method. That particular report should tie exactly to your inventory account in the GL. If it doesn't, you do need to reconcile it and find out what caused those differences. And we can help you with that as well. Then what you can also do, there's a second report, which is called inventory to GL reconcile report that you can reconcile. So inventory valuation report shows you quantities and values, right? Or costs. The inventory to GL reconcile report shows only total cost per item in, on hand for those items. But it also has a bunch of additional information. The total value on the inventory valuation report must equal exactly the total inventory amount on the GL reconcile report, which should also reconcile exactly to the GL balance for inventory. We can help you reconcile if you need assistance with that, but it's very important all of those things are nailed down and reconciled. So let's talk a little bit more about that inventory to GL reconcile report. First of all, it's really kind of ugly in my opinion, but it does work, and it can be very long. It's just a lot of stuff in it, but it actually works really well. So there are a number of columns on that report. Some of them you won't care about as much, but there are 4 columns you do care about on that report. One is inventory valuation. That's what's going to tie to your inventory on your GL. Then there's received not invoiced. That has to tie to your accrued purchases account, which should be a liability like right underneath accounts payable, right after accounts payable. And that also is actually, and that number for accrued purchases or received not invoiced is actually coming from posting, general posting setup or general product posting group with inventory accrual amount parenthetically interim. That's where that number is coming from. So if you print out your received not invoiced and it doesn't tie to your accrued purchases account, then you do need to go ahead and look at your posting setup and confirm that you have the correct inventory accrual account interim in there. Similarly, with shipped not invoiced, that should tie to your shipped not invoiced GL account. When I say received not invoiced, that's on the payable side. That's what I received, not received a vendor invoice. Shipped not invoiced is what I've shipped to a customer, but not sent them the customer invoice. Received not invoiced payables, shipped not invoiced receivables. So that should go ahead and tie to your shipped not invoiced GL account. If it doesn't, we can probably help you with that as well. In general, most people at your end, shipped not invoiced should be 0, right? You shipped it to the customer, you better invoice them now, right? You shipped it, so that's revenue, and that should go into 2021. So make sure that that number, ties out, and if it ties to 0, hopefully, but if it doesn't tie to 0, at least it's a number that makes sense to you. And then lastly, there are two additional columns: expected cost to be posted and invoiced value to be posted. Those should both be 0. So hopefully that gives you a little background to some of the things you should be reconciling each month end actually, and then definitely at year end. The other ones go without saying because pretty much all accountants know this. You need to take your cash GL balance and reconcile it to your bank account balance. Now, why am I bringing this one up? Because we frequently find where the cash GL balance, is what you reconcile in your bank rec. But then if you pull up the bank account balance, like in the actual bank account itself, it actually doesn't tie to the GL balance. Those two have to tie to the penny. So make sure you check that. Secondly, you need to reconcile, of course, the things reconcile aged accounts receivable report to GL and reconcile aged accounts payable report to the GL. So now we've kind of moved through the general stuff. Let's talk briefly about 1099s. The 1099 functionality in Business Central works extremely well. I recommend that you use it for sure. So here's the trick you need to know is there's a little utility you need to run to update the form boxes. And this is when you are on Business Central SaaS. So you go to and search for update form boxes and you go ahead and run that. And what it's going to do is it's going to update the form boxes on the 1099 form boxes page. The next step you're going to do is you're going to run your vendor 1099 information report. And so again, search for vendor 1099 information report, review that for accuracy. A lot of times it's not going to be accurate, so you've got to make sure you get the right numbers in it. And if it's not accurate, you need to make your 1099 corrections in the vendor ledger entries window. It's actually kind of sweet. You pull up the vendor ledger entries window and you can go ahead and change the, the box amount, the amount as well as the box number on it. It's kind of cool. And then you can go ahead and print those 1099s but that can be done at any time, of course, before like January 31st. So let's talk about general ledger next. What does the GL close do? What it does is it actually locks down the year for after you've done the closing on it, except for you could still enter transactions, backwards into that year like I discussed. But basically what it's doing is take your income statement accounts, all your P&L accounts, and closing to retaining earnings, and then your balance sheet accounts are rolling forward. So, and then all the year-to-date balances in the GL are going to be updated. So here's the process you follow for the general ledger close. So the first thing you do is you complete all the posting procedures for the other modules. We just talked about, inventory, AR, AP, cash, but of course, every single line, I can't emphasize enough, every line on your balance sheet has to have separately verifiable documentation to support it. It's critical that you have that. That's the only way that you actually know your financials are correct. Then what you'll do, okay, as you got everything posted. Now what you're going to do is you're going to verify posting type. So I'm sure you noticed this when you set up a new GL account, there's a field that you have to fill in called income/balance. Okay, that's a super important field because that is what tells the system is going to close to retained earnings. So the way to verify it is go pull up your chart of accounts, like your view of chart of accounts, and then add the income/balance column to it, and then just scroll down. All the balance sheet accounts should have the word balance in them. All the P&L accounts should have the word income with them. If you get this wrong, you actually will have the wrong retained earnings when you close. Absolutely critical you have this step completed. If you make a mistake, can you go back and undo? Yes, you can. But I just want to make sure that you know that that's what's going to happen. So then the next step is to close the year. And you do that by searching for accounting periods, close, and then go to close year. Just a reminder, once you close the year, you can't open that year back up again. It's going to be marked when you're in your accounting periods. It's going to be marked as closed, but you still can enter transactions into that old year. The next thing, let's see, you would create the new fiscal year. And actually, most people have already done that before this. By the time you're doing close and it's January 2nd, you got people entering transactions on January 2nd. So you could go ahead and create your year. You have to do it at this point, but most likely you have done that previously, and you do that by searching for accounting periods, create year, put in the number of periods, the date range, and you're good to go. The next step is to run the income statement batch job. So what I've done right now is I've closed everything, but what I need to do is actually do that adjustment to take all my P&L accounts and close them out to retained earnings. And that's what the close income statement batch job does. So first thing you're going to want to kind of best practices is create a new general journal batch that you can close to and give it a name that's just kind of outside what like year-end close, 2021, whatever, so that you can identify it easily. The next thing you'll do is, we recommend, is using some sort of easily identified document numbers, such as close year 2021, CY 2021, so that it just like jumps out at you, the close year, by the document number. The third thing is on the retained earnings option. What I'm doing is going through that screen that you do the close income statement batch job to. And by the way, if you don't catch all of this, our documentation that we're sending you will actually go through each one of those fields and explain each one of them as well. So you'll have this documented. If you are going to be closing retained earnings by dimension, you select detail. And we do recommend doing that. Just go ahead and close by dimension. It doesn't take any more work, doesn't cause any problems in the database, just select detail. However, if you just want to send to retained earnings and you don't want to have any dimensions on it, you would do it, the option you select is called balance. Then that last thing you're going to do is, the last option you're going to select is select all your dimensions so you can close by dimensions. When you select all the dimensions and you attempt to close by dimensions, if you have some, value entries in there, you have some restrictions on, accounts and what they can close to or anything like that, you will have to clean that up before you go ahead and do it. It's going to give you an error message and list out every account that has a dimension issue, and you'll want to fix all of those before you go ahead and complete the close. But actually, it's kind of nice because it does make you clean up all your chart of accounts. Then the last step, the income statement batch job, now it creates a general journal batch. Now you could go ahead and post that entry. And I recommend printing that so that you have it. Here we go. We're already to year-end frequently asked questions. All right. So do I have to close the year before I enter New Year's transactions? Nope, just keep posting as you normally would. I just want to emphasize that. I'm getting the error, posting date is not within your range when attempting to post a transaction. And this would typically happen on January 2nd. In other words, I have allow posting from and allow posting to either a general ledger setup or user setup that's restricting from posting. I do recommend, or we do recommend, that you make sure that, close of business December 31st, you open up the period for January 2022, just so that it's ready to go and your people can walk in on January 2nd and do it. But they will get this error message if you forgot to do that. I'm getting the error, the accounting period does not exist for new fiscal year. That means you haven't set up the new fiscal year yet. And you know how I went through the list of setting up that new fiscal year? You do have to do that in accounting periods. Why don't some of my vendor payments show up on the vendor's 1099? So this is kind of a cool thing, but you have to understand how it works. So here's a classic way of how it works. So you are a payables person, and in January, you get a new vendor, and somebody tells you, you got to set this up as a 1099 vendor, right? Or I'm sorry, you get a new vendor. Let's try this sort of scenario instead. You get a new vendor and you set it up. 2 months later, you've been paying this vendor. 2 months later, someone looks at that and goes, oh my God, that was a 1099 vendor and you didn't make it a 1099 vendor. So you go ahead and mark it in March as being a 1099 vendor. What happens is when you run your 1099s at the end of the year, January and February payments will not be in there. March through December will be in there. So what that means is that you did not have the box marked in the first 2 months, but you did in the last 10 months. So what you need to do is go ahead and manually adjust the 1099 for that. But keep this in mind, because there are, as a handy thing to know about, because there are occasional times where you have a vendor that sometimes is 1099 and other times when you pay them, it's not 1099. And this gives you the opportunity, by managing that 1099 option on the vendor card, it gives you the option of switching back and forth on purpose because you want to. Should I be using the close inventory periods utility? So yeah, there's the utility, and those of you who are on the GL side and you spend time looking at things, you'll see that little option to close inventory periods. We actually have used that at times, and I think it's better not to use it, frankly. It doesn't add anything to the system that you don't already have. What it really does is go through and make sure that you don't have any negative quantities, right? Well, some people do have negative quantities. It happens, right? In real life, you get negative quantities occasionally, unless you have the option selected in inventory setup to not allow negative quantities, right? So it'll check and make sure and give you error message if you have any negative quantities. It'll also then, after you run this utility, it'll keep you from posting to a closed period. But if you think about it, you can get those two things just in your normal processing. Review negative quantities. Okay, I looked at all of them. Yeah, I got a couple negatives, but I totally want that because that's what I need. And that's the way it should be for me. And then I can also look at the allow posting from period feature to stop posting to a closed period anyway. So really, in a nutshell, that close inventory periods utility doesn't really add any value, and really it's kind of a pain to clear those errors up anyway. So I recommend you just don't do it and do these other two things instead through reporting. Does everyone need to be out of NAV Business Central when I do close? Yeah, we do recommend everybody be out, just because there's a small chance that somebody could enter a transaction and impact the close. And I closed the year in the GL. Is there a way to reopen or undo it? Okay, remember there's a 3-step process: close year, close income statement, and post batch. Close year can't be undone. However, you can still post transactions back to it. You can't be undone. Close income statement job, you can run as many and post the batch. You can do it as many times as you want. No harm done. So, can Samantha help me with the close? Yeah. We do this a lot this time of year. It's a lot easier for us to do year-end close and walk through those procedures, mostly because we do it all year long, because we have fiscal year clients as well. So it's like a normal thing for us to do. For most of our clients, they only look at it once a year, and then they have to remember, okay, how do I go about this? Am I going to screw it up? Blah, 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 blah. So if you want us to, we would just do a remote session with you and help you close on a remote session. And it'll save you a lot of time and maybe some anxiety. So you're welcome to email support@savantis.com to schedule a time if you need to. Q&A. All right, we did pretty well. Do I have any questions? I see a couple of things came through. And it looks like Natalie went ahead and mentioned, the first question was, if you close 2021, are you able to make corrections in 2020? Absolutely, absolutely. That's why you go ahead and just run the closing routine and get it over with. What's the benefit of closing so early if you're making audit adjustments? Yes, it's because you're getting everything closed to retained earnings and you've got good numbers right away into the year. So yeah, so those are very good questions and important. And I definitely will on the close. Tell you what, our company will be closed by the 8th, guaranteed. We never, we're usually between the 6th and the 8th before, and we're completely closed out. It's kind of nice too, because when it's done, it's like you can put that behind you and just start working on the new year stuff rather than just having that hanging over your head for a long time. And as accountants, we like to complete things and have a sense of satisfaction from getting something done. This one will give you a sense of satisfaction that you have completed out the prior year. So Drew, I think at this point we have to see if there are any other questions.
Yeah, so if anyone else has questions, feel free to either drop them in the questions tab or the chat box, and we'll get them read aloud for Janelle to answer. So we'll just hang on here a minute or so and wait to see if any more questions come in. But now I guess I can just remind everyone that we will be sending the recording and the documentation via email to everyone who registered for the webinar. So keep an eye out in your inboxes in the next day or two for that information to come through. And if you do have any additional questions at that point, feel free to respond to the email or support@savantis.com. Go ahead and shoot them an email and we'll make sure that you're taken care of. So
yep.
Again, we'll just hang on here for a minute.
I'm thinking Natalie's happy because I didn't have to invoke ice cream during this session.
Very happy. Way to go.
Right. Well, it looks like we're not getting any more questions, so I think we'll go ahead and end it there. Thank you all for attending, and again, keep an eye out in your inboxes for more information to come. You all have a great day.
Thanks, everyone. Take care.